private equity isn't just about buying companies. It is about identifying potential and unlocking value. Today, we are going to break down how this industry actually works. At its core, the model is simple. Firms raise capital from limited partners, like pension funds, to buy businesses, improve them, and sell them for a profit. But how do they find these deals? It is not just about auctions. The best firms rely on proprietary sourcing, building deep relationships with founders long before a sale process begins. They leverage industry advisors and data to spot off-market opportunities. It is a game of information arbitrage, knowing something the rest of the market does not. Once a target is found, underwriting begins. This is where we validate every assumption. We do not just look at past performance, we stress test the future. We ask, what happens if revenue drops 10%? What if interest rates rise? Underwriting is about protecting the downside while mapping out the value creation plan. So, what are firms looking for right now in 2026? The landscape is shifting heavily toward tangible assets and specialized operational value. Energy transition is massive. Firms like Aura and Liberty Mutual are going big on decarbonization. We are seeing billions deployed into climate solutions. Just recently, Vision Ridge raised $2.4 billion specifically for energy transition assets. The capital is following the global shift to sustainability. In real estate, the focus is on social infrastructure. We are seeing major moves into affordable housing platforms by players like Nuveen. It is investing with a purpose. Then there is AI, but it is not just buying tech companies. Firms like Brookfield believe the real edge in AI investing is having the operational know-how to implement it. Finally, the secondary market is white hot. Continuation funds, like Verdane's recent €600 million deal, allow firms to hold on to their best winners longer. Private equity is evolving. It is becoming more specialized, more operational, and deeply integrated into the real economy. That is how the smart money moves.